Okay, good morning. I've seen a new faces that joined the group, so you guys are welcome. And please, we are intending to give value to this platform and this community. We really want you to help us do that. We need your engagement, your reactions to our post, and then if you can invite others to join us, it will be really appreciated. And this morning I've actually started a discussion about the fundamentals of the dollar. The interest rate is one of the major economic indicator of every nation. The moment the interest rate is low or is high, it creates a lot of impact to the function of that economy. So today the news that is going to be released by 7 p.m. is called the FOMC. That is the Federal Reserve, the US, announcing the current interest rate based on their decision. It is a monetary policy something, and what they do is to correct the inflation prospect of the dollar. Are we together? So their aim is to generate policies that will help the dollar. So whatever they're doing, it's all about helping the dollar. So if they have a lot of measures that they normally check before they make those decisions, and I want us to look at the technical picture of the dollar, the fundamental, and that's why the post I shared yesterday talking about the things that you have to understand. There are a lot of things that you have to understand, and it's not just about the technical chart like this. It's a lot. There are a lot of aspects of forex trading or even the financial market that you have to understand. What we are doing as an organization is that we want to create a group of people that are really passionate about this and want to give them all that they need in order to be able to succeed. We want us to go through the journey together. So please don't feel like you're making payment for whatever it is. No, just join the group with your full chest and be ready to learn. Is that okay? So talking about the dollar, last week I shared this post in that group, and I was looking at the dollar dropping here. Even if it's just tipping here, this was Monday movement, this is Tuesday movement, this is today's movement. So today, as you can see, we're already pushing high. But are we just going to push high, or we're going to come down before we push high, right? So this is going to be done when from this morning hour till the end of the day hour. Are we together? So I want us to look at this whole movement. For this whole movement, you can see that the dollar is going up. The dollar is going up, and technically this is a clean depiction of the interest of the dollar to reach up to this high here, this one right here. So is it possible that it's reaching here? Of course, it has already given us all the indications that we are looking for. The yesterday price, if you look at the daily bias analysis, if you look at what happened yesterday, we closed above previous day high. We closed above a previous day high, and this is a clear indication that today also will be closing above this high. So right now we want to see the false movement that will be dropping down. Let me just focus on here. This is our target here. Our target either today, tomorrow, whatever it is, like moving forward until we reach this target. We want this to completely deliver first. Is that okay? So let me just expand, and let's just focus on what is happening right here. So what is happening right here, we can see the price delivery of yesterday. We close above, and indicating that today also we are closing above here. But before we close above here, we have to drop below. And this coming below is what we call the Judas swing. That is a false movement. A false movement. The market is going to give a false movement. That is, you as a person will be thinking that the market is going to come down. So from there, people that are unaware will start taking sell. They will start selling the market, not knowing that the market is just dropping to go up. We that are aware, that can see this price action even before it deliver, we are already sure of what we want to do. The market, actually what happened here is that market work with this fair value gap right here, this level held the price here, and then we push up. No interest, it didn't show any interest of dropping down here. So this, looking at the daily time frame, market didn't give us any indication of dropping down there, right? And from here we had the market pushing up. So let me just work with this. From here we had the market push up, and right now this is what we are looking for today. We are looking at, let's look at what, okay, it's the same thing you were seeing earlier. So okay, this was the movement yesterday. Movement yesterday started right from here, and then we came down. This level was respected. This is what we call a gap. It was respected, and then the price went up. So this price have to come down here. We want to understand, as the price is coming down, where is the likely level that the market is going to reach before we start pushing up, because we are definitely going to push up, right, based on all indications. The news, the data release may come out to be negative, and then to be positive, and then if it come, whatever the decision by the Fed, right, whatever they end up deciding for the dollar, is going to have very massive impact. But what we are anticipating, that's what I'm saying, what we're anticipating right now is that the movement this morning and afternoon will come down here. Then in the evening, when the news is going to be released, probably we will be around this other block here, right? This here, we can see a clean level here. What is here? This is our mitigation, because this was our low, and this is a low that was not taken here. We failed to break this low. So what is this? If we fail to take this low, what is here? That is your mitigation block. So we want to get the reversal inside this mitigation block. That's where the reversal is going to happen. So right here, we are anticipating this reversal to happen right here. The inefficiency that was created here, you can see how the market dipped in and then it balanced. So this is what I just wanted to indicate this morning, and then we're interested in this dropping down, and then we're picking up. That's all. Maybe a bonus tip would be the brief movement, how we can actually make the most of this little up down movement that the dollar is going to make. So correlating the dollar with the US, with the Euro USD, right? Euro USD. This is our mitigation block, because the market, this market currently is forming a market maker buy model. For those who are aware, we're having a market maker buy model right here. Market maker sell model. So we have finished the sell side delivery. This was our accumulation stage 1. This is our consolidation stage 1, accumulation stage 2, reaccumulation, and now we are dropping down. So inside that stage 2 reaccumulation, we are looking at that whole block. We want to get our entry right inside there. And if you look at the whole price action, the inefficiency we're having right here is this fair value gap here, and inside this fair value gap, we're interested in this movement to move from here, come inside the fair value gap, then we will now drop down. This is our target. Like from that up there, we're interested in the market dumping even below here. It's going to take this, and if you check the amount that we're interested in making, it's going to be massive amount. Maybe even if it say that you got your entry from here, this is almost, this is 80 something pips, right? And how much are we going to risk? So for us to know how much we're going to risk, we have to go to the lower time frame. Even if you're going to reach risk from here, you go to the lower time frame, you will see it properly. So coming inside that range, every price action here is balanced, so there is no any inefficiency right there. What is the inefficiency we're having? For us to see that, we have to use the 15-minute, because we do what we call the time frame pairing. You don't just work with every time frame. All these things you're going to learn if you connect or make payment for our course, right? So right here, if you look at this movement here, this point here is what we got our breaker block, because this high took this high. So right now here, even if we remove this here, we remove this level here, this will be our breaker block. Look at the bearish candles that formed right there. That's our breaker block. So we are interested in this market to push up, and if that is what we say, where do you see an inefficiency right there? Can you see an inefficiency right here? right here. So we're looking at this market to come up right here, and we have another inefficiency above here, but we want to work with this one that is inside here. So right here, our stop loss will be right here, because we can be wrong. That's what we're saying. If we are wrong, we want it to stop right here and then take us out. So we're looking at this point. This is the inefficiency we're interested in. This is a higher high, higher low, higher high, higher. This higher low was broken, so this is a mitigation block. I mean, this is a breaker block, right? So the breaker block from here, we're gonna hold the price. We're looking for any PDR or any inefficiency inside the breaker block. We have this right here. So this now will be shifted to here and here. That's what we're interested in the market reaching for. So this is our entry, our sell entry from here. We want it to reach there, and then we take the sale from this point. And then for this up movement, because if you want to trade this up movement, you are still gonna be right. It's not bad for you to anticipate this bullish movement, because clearly here you can see that we already got in a market structure shift, right? This was our lower high, lower low, lower low, lower high, lower low, lower high, then lower low. Then we had a market structure shift that happened just now. So we are interested in a buy entry that will take us up there, right here. From here, if you go further, you look below here, you can see a favor look gap right here. So it's gonna be something like long entry, and then our risks, we're just risking 5 pips on this trade. We're risking these 5 pips, and how many pips are we anticipating to make, right? And another thing is that if you capture this movement, these 5 pips, and the market really work as we're supposed, you can actually just not even take this trade. But of course, this is about 40 pips. Well, for the benefit of that, let's put it at this other block point here. Let's just target this 30 pip internal range liquidity right here. But we're actually looking at this to come here. So this is 30 pips. If you enter with a 1 lot size, if you are trading a standard account, that is over $335 from just this movement. Just this morning, you capture this amount without stress, right? So we're waiting for the market. We'll be waiting for the market to dump right inside here, then we take our entry. Right inside here, then we take our entry. Is that okay? You can actually increase just for the benefit of that, maybe to 8 pips. 8 pips. So if you check the 5-minute time frame, check the 5-minute time frame. Okay, network is bad, sorry about that. Okay, good. So right here you can see the point we're talking about right here. Our entry point is right there. So this market is going to drop inside here, and then that's where we'll be taking our buy entry. So this little what I wanted to share this morning. I hope you've got something, and if you really want us to dive in deeper discussion, you understand, because that's my desire. Our desire is that you are able to do this on your own, without us, without depending on us. We are not running a signal service. We want to teach you how to do this yourself. So make your payment, come on, and let's get on together. Yeah, thank you.